Some of these companies will be multi-baggers. What is a multi-bagger? A multi-bagger is a company which makes many times the current share price. So if a company goes from $2 to $10, that would be a 5-bagger. Now, I will identify some multi-baggers in this video. Today, I am going to be talking about the silver mining companies. I think that the prospects for these companies has never been better. Not only are they very undervalued, but the prices are starting to move up faster than gold, and the prices are moving up faster than silver, and they're moving up faster than the stock market. Investors are starting to allocate a little bit of money to this very tiny sector of the market. Because it's so small, a very small amount of money could move the market a long way. Some of these companies will be multi-baggers. What is a multi-bagger? A multi-bagger is a company which makes many times the current share price. So if a company goes from $2 to $10, that would be a 5-bagger. Now, I will identify some multi-baggers in this video, but you have to be careful. The higher a share price can go, the more risky it is in general. So many of these companies which have the greatest upside also have the greatest downside. The reason for this is that many companies are mining their gold in a politically unstable jurisdiction, or they might have a very thin margin of their selling price above the cost of mining the gold, so they're very vulnerable to a fall in the price of silver or gold. And when I use the word gold, take that to include silver, because we're talking about silver miners, but most silver miners are in fact also gold miners, and you'll see when I get to the list that many of the gold miners, which look like gold miners, are classified as silver miners because they also mine silver. Now, let's just start by looking at the prospects for the silver price. You can go to the Silver Institute and see the historical supply and demand table. And if you look at the top, you'll see that the mine production has been falling annually since 2016. Well, the production will be up 2% this year, but in 2016, mine production was 900 million ounces. And now, in this year, it's forecast to be 835 million ounces, a drop of 65 million ounces. The reason that the production is not increasing despite the higher silver price is that a lot of the silver mined in the world is mined as a byproduct of another metal, such as gold or such as copper. So the demand for silver the supply of silver doesn't really change because it depends on how much is brought out of the ground as a byproduct of the other metal. Although we've got falling supply, we have rising demand. Demand over the last decade has risen from 993 million ounces to 1,148 million ounces. That's a rise of about 150 something million ounces. So whilst supply has gone down by 65 million ounces, demand has gone up by about 150 million ounces. So we passed the point of supply being less than demand a couple of years ago, 2021, 2022, and the gap is just growing bigger. Now, according to the Silver Institute, part of the demand comes from the purchase of silver coins and bars for investment purposes. They reckon that 200 million ounces will go in that direction this year. Just to put that in perspective, that's about 1 ounce coin, 1 ounce of silver for every 45 people. So do you have your fair share? Probably, if you're watching this, you have more than your fair share, because I expect you bought more than 1 ounce. Another reason why the silver price is likely to push higher is the announcement by the Department of the Interior, the DOI, that they have entered silver into the draft list of critical minerals for the first time ever. So why is silver on the list? It's because it's a strategic metal and very much needed by the American electronics and defense industries. And if there was a disruption in supply, let's say from Mexico, which is the biggest supplier of silver to the United States, it would have an impact on the GDP of the United States, even if a disruption in supply is low. They say there's a 4% probability of a disruption in supply from Mexico. What does that mean? It could mean that there's civil unrest in Mexico. It could mean that Mexico decides to have some sort of retaliation against the United States for tariff reasons or some other thing. Or there could be some other event which makes the transportation of silver from the mines to the American border complicated or difficult. So what does it mean if silver has become a strategic mineral? It basically means that the USA has to stockpile it for emergencies. So they're not going to be buying tomorrow. At the moment, the report is just a draft report, and there's another 30 days of consultation on it. So that consultation period expires on the 25th of September. And assuming there's no change in the decision, then still silver will be a strategic metal, and the USA will have to start stockpiling it. How much would they stockpile? Well, we don't know that, but we can say that at one point they held 5.9 billion ounces of silver, and I see in 1958 they had 2.1 billion ounces of silver. To put that in perspective, that's well over 2 years mined supply. So they couldn't even buy a tiny fraction of what they used to hold, because in fact, all of the silver coming out of the mines is used by the electronics industry. So if they didn't make any attempt to buy any silver, it would certainly push the price up a lot. But we don't know if or when they're going to start doing that, but I think they will have to once silver enters onto the list officially on the 25th of September, probably. Now, just remember, none of the stocks that I talk about today are recommendations. This is not meant to be a recommendation for anybody. I'm not your financial advisor. I know nothing about you. I don't know about your family, your age, your job, your income, or your other assets. I don't know your personal risk tolerance, so I can't advise you, and do not take anything in this video as investment advice. But what you can do is look at the shares I'm talking about and go and discuss them with your financial advisor, or if you're capable of doing it, do your own research. And I'm going to talk a little bit about how I did my research, so if you want to do the same thing on your own, you'll be able to do so. But no obligation, because I'm doing the work for you, and I'll be naming the stocks as well. So let's start by looking at the list of companies in detail. There are 38 companies I chose to put on the list for further examination. And they range in size from the very large, 44 billion US dollars. That is large, at least for the mining sector it's large, all the way down to $50 million. That's tiny for any sector. And so I broadly covered all the companies I could in that range. There were one or two which were located in strange places which we can't trade the shares, and it's harder to get the information, so I had to eliminate them. But broadly speaking, I've covered most of the market. Now, there are tens, if not hundreds, of companies which are smaller than 50 million, but as far as I can see, they are mostly prospecting companies, and therefore they're not silver mining companies. They're looking for the silver. And you know what they say about a prospecting company? It's basically a few holes in the ground with a liar sitting on the top. So even if I was to study these companies, I wouldn't be able to tell you which ones are going to be the next 100 baggers. Certainly one or two of them might well be. They might find the gold, and they might get the money somehow to dig it up, but most of them are run by one or two or three people. I found some which are run by husband and wife, and they're looking for the silver. Will they find it? Who knows? But while they're looking, they're living off someone else's money, one of the investors' money, no doubt. So how did I get this list of companies, this list of 38 companies to study further? I went to the Global X Silver Miners ETF and looked at all the stocks which are in that ETF, which is supposed to cover all the large mining stocks, silver mining stocks in America. And I used that as my starting point. Now, I noticed that a lot of the companies have the word gold in their name, and a lot of the companies, even if they don't have the word gold in the main name, also mine gold. So when you hear me use the word gold or silver, I'm using it interchangeably to mean them both. So let's assume that many of the companies I'm going to talk about, and it's just a fact, are actually gold miners as well, which is why I have to often talk about the gold price too. But technically they're all classed as silver miners because they mine some silver. Now, what sort of silver miners do I like? I like silver miners who are already mining the silver and they're selling it, or they're just about to start selling. Ideally, I'd like them to be selling it at a higher price than it cost them to dig it up. In other words, in simple English, these are likely to be profitable mining companies. At least if they're not profitable now, they're likely to be profitable in the very near future, because they're already digging up the silver, they're selling it, and they only have to increase their production next year and they'll be making a profit. So that's two things: digging it up, selling it, and making a profit. Third, that's three things, I suppose. Next thing I'd like, I'm going to call it the third thing for simplicity here. I want companies who are likely to dig up more silver and or gold than they did last year. So I'm looking for a regular increase in production. So that means that even if the silver and gold price stand still, their profits should go up due to the higher levels of production. And lastly, I want a company which is dirt cheap. And one of the ways to measure that is the price-earnings ratio. I know it's not the only way to measure, because people will write to me and say, oh, I measure like this or like that or the other way, or better ways. And there are better ways. But simply speaking, I want to buy companies with a low price-earnings ratio, which indicates that they're very cheap and have all those other qualities in the same company. Unfortunately, there's about as much chance of me finding a company with all of those qualities as I have of getting Miss Switzerland to go on a date with me. In other words, no chance at all. But here's the good news. I can find some companies. I thought you probably think I was going to say I can find a girl who's young or ugly. But no, I wasn't going to say that. I was going to say I can find some companies which got some of these qualities. So I'm going to have to make some compromises. And if they've got two or three of the qualities, they're still worth looking at, and perhaps they'll make it to my most favoured list. Now, here's the list of silver mining companies sorted by market cap, with the largest companies at the top and the smallest companies at the bottom. So for each of those companies, I wanted some crucial information. And I tried to get it from artificial intelligence. In fact, I tried 8 different AI tools to get the information I'm going to tell you about in a minute. And every one of these AI tools gave me different information. It was all over the place. It was hit and miss. And you didn't know which one to trust. And you couldn't trust any one of them because individually they were all too hit and miss in the data they gave me. So the best result, the hard work I had to do, was go to each company's website and try and find out the missing information that I wanted myself. And that's quite hard work, and that's why it's taken me such a long time to produce this video. I've been working on it for weeks, if not months, in terms of doing the research, though most of it has been in the last week or two. So the information I wanted, for each company, I wanted to know the following. How much gold and silver did they mine last year? How much did it cost to mine it? And that figure I want is the AISC, or what's known as the all-in sustaining cost, which is usually given as dollars per ounce of gold or dollars per ounce of silver. Next, I want to know how much gold and silver they're likely to mine next year, and the year after that, and the year after that. That's 2027. and I'd like to know how much it's going to cost them to dig that out of the ground. In addition, I want to know how much other costs they've got, because other costs could be things like prospecting for new gold, marketing, overheads, and taxes, of course.
Alert from software update.
So I'm looking for, let's turn that sound off there. I'm looking for companies which have a very good prospect of increasing their gold production, and that have got, also I'm looking for companies which have got lots of gold left in the ground. So I'm looking at the reserves, and I want to know how much they sell it for each year. Now, they can't tell me how much they're going to sell it for next year, because they'd be telling me what the gold price is. But if they can tell me what they sold it for last year, it gives me a sort of clue whether they were in the range of what the gold price is. And they or gold and silver price, they all were. So that's wasn't really a big problem, but it was just useful to know. And I can assume that they will all sell it at the prevailing gold and silver prices in the future. So I also wanted to know for each company what their estimates were for production in the coming years of each metal. Now, that information was a little bit harder than I thought to get. It seems very simple, but at the end of the day, a lot of the companies weren't specific about how much of their output was gold and silver. They kind of gave it as a consolidated thing. They called it gold equivalent ounces, or GEO, gold equivalent ounces. So basically, for every, let's say, 100 ounces of silver, they counted as if it was 1 ounce of gold. Or for every ounce of gold, they counted as if it was 100 ounces of silver. So I had to break that down, and that was a little bit difficult. And then, of course, they've got, for that figure, the all-in sustaining cost, which is partly the cost of the gold getting out of the ground, partly the cost of getting the silver out of the ground. So again, it was a little bit complicated to break that down. Lots of companies weren't very forward with the forward projections. They didn't say how much gold or silver they're going to get out in 2026, 27, which is what I want to know. Usually they told me for the previous year, and usually for the current year what they expected, or at least if they didn't, I could extrapolate that by looking at the last 6 months results and find out how much they dug out in the first 6 months this year, and extrapolate that to see how much they might dig out in the whole year. So I had to make a few educated estimates as to how much silver or gold might be dug out by some companies, especially when it came to estimating the amounts in 2026 and 2027, because almost no company would give me, well, I won't say no, there were some, almost no company gave me the answers to that.